Trading is not about strategy as much as you think it is. I could invent a new strategy today called the Flip Burger Spaghetti Cheeseburger. What the fuck? It's not about strategy, dude. You can use a strategy. You can use smart SMC, ICT, whatever indicator you use, moving averages. All of those things do is give you a framework of how to operate in the market. You got to remember, the market is a random environment, and you're bringing your mind to that place every single day, and you're interacting with it. And depending on what your state of mind is how effective you're going to be, winning or losing. A losing day is not a bad day. A losing day where you literally took minimal risk, or you're very risk off or low risk, is actually a winning day because you're protecting your trading account. A winning day just means that you were present and aware of what opportunity that current market was providing you. So the strategy, what it does, if you either make one or you borrow somebody else's, there's a lot of mentors out there, is what that does is it gives you the framework of how to operate effectively, which there's many ways to do it. You see, when somebody says they're a trader, that's a kind of vague statement, because what does that mean? Do you scalp? Do you just intraday trade? Do you swing trade? Are you just like an investor? Are you trading stocks? Are you trading futures? What are you trading? And on what time frames are you trading? And so you have to understand that trading encompasses a whole range of different things, and your strategy is just what gives you that framework of how you're basically gonna pull more money out of the market than you give in. If I start with $100, I may give $1 a day, may make $2 or $3 another day. And then at the end of the month, I may have made $20, $30 because you need money to make money. You know what I mean? So, and then you scale that up. And as you get more comfortable with risk and sizing up, then you can just repeat the process. It's really about just making yourself as available. And that's why trading is so mental, because you have to be there to either mitigate your downside or make yourself as available as you possibly can to every opportunity that's presented in that day. That's why trading doesn't really take more than an hour or two, because there's only really, depending on what type of trader you are, 1 or 2 really, really good moves at a certain time of the day that you can capture, and you either capitalize on it or you don't. And if you don't, that's not a bad thing. That's the rewiring part. If you don't capitalize on the move that day, that means that the market wasn't presenting opportunity. If you do capitalize on the move, that means that not only was it presenting opportunity, you were there and you were present and you were able to act on it. Because a lot of times there is opportunity, but we don't act on it. Other times there's no opportunity and we're trying to force trades. We're trying to force outcomes. So yeah, your strategy, really, all it is giving you that framework of how to operate in a random environment, because it is random. It doesn't matter how many confluences or indicators. You can have 5 confluences, an algorithm, and it won't even matter. It could still not go your way. You could take a trade at random and it'd be the best trade of your life. So yeah, consider that, man. That's when people say that it's 80-90% psychology. It really is. It really is 80-90% psychology.